Cool. I think we can start now. Um, hi everyone. Thanks for joining in. Today we have a really special Twitter Spaces with Ish Mohit of School of Intrinsic Compounding. For those of you who don't know, School of Intrinsic Compounding uh, is a learning community that uh, that is present across SOIC's course platform, their YouTube channel, and in general the SOIC community. Ishmoit is the founder of SOIC and has been putting out informational content on the investing space for the last couple of years. He is a seasoned investor himself and has been in the market now for many years. He's here today with us to share his knowledge, his insight, his wisdom, of which Sahir and me have been beneficiaries for the last couple of years. So, hi Ishmoit, welcome to your first Twitter Spaces, and it's an absolute honor to be hosting you.
Thank you for the kind words. I hope I do justice to the topic because sort of I've thought long and hard about it. And why do some countries with even lesser resources do better than the other countries? Why do some businesses with even lesser resources do better than other businesses? And actually, there's a pattern behind it. So that is one of the reasons. So that we'll discuss in today's talk.
Fantastic.
Thanks, Ishmohit. Thank you so much for joining us. It's a real honor. So, guys, just a quick head start. Nothing said here today is investment advice. Everything is for educational purposes only. Please consult your own financial advisor before investing. Also, the format will be slightly different. Ishmohit will be giving a 30 to 40-minute talk. Uh, and we will be asking questions in the middle of the talk just so it's a little more interactive, and then it'll be followed by by Q&A. If you've joined us for our sessions before, it's not a typical Q&A this time. It's a bit of a presentation, and then it'll be followed by a Q&A. So um, if you have any questions, please message either Krishna or I ahead of time so that we can pull you up after the presentation's over. Anything else, Krishna, before we start? Ishmohit, anything else before we start?
Nothing from my side, like in terms.
No, I think we can go ahead with the presentation, and we'll sort of interject with questions as and when.
Great, great. So I think to begin with, so today's topic is business. So today's topic is business strategy and its essence in investing. And actually, it is not just about business strategy. It's also about the aspect that how two businesses with exact same resources can end up with different outcomes, and how two countries with exact same economic resources or with exact same natural resources, or even with some countries which have had lesser natural resources, have actually had better outcomes. Part of the reason is that both businesses and countries follow different strategies when it comes to politics, or when it comes to different competitive strategies, or when it comes to different business strategies. So one of the most common misconception, or one of the most common myth in the world of business or investing, is that if you ask anyone what is their strategy, suppose if you ask any businessman what is their strategy, and if you ask anyone what is their strategy, and if their answer is that our strategy is to be the best, then most likely or not, they do not have a strategy, or a well defined one. I think one of the key criteria that defines a strategy is in what unique way can you add value to the society, or in what unique way you can identify white spaces and attack them. So, just to give you an example to start with, now way back in, if I'm not mistaken with the dates, so way back in 1960s and 1970s, you must have heard about heard about an energy drink by the name of Red Bull. So Red Bull was actually was supposed to be launched in West Germany, but Red Bull.
Sire, can you hear him?
Nope, nope. Um, Wait, what's
Let's let's give it a second and see
yeah.
if he's able to come back. If not, we'll move to speakers, move him to listeners, and then bring him back. Yeah, yeah, you're audible now.
Finally facing the Twitter bugs, right?
Yeah, yeah. Please go ahead.
Yeah. So just coming back to the story of Red Bull. So again, its founder sort of saw that there is like cola drinks, and then there is the idea of people selling Gatorade and Lucozades of the world. And one thing interesting that was there was that there was no such thing that provided extreme energy at that moment of time. So originally, Red Bull was supposed to be launched in West Germany, but the like authorities in West Germany sort of जो भी उनका health regulations थे तो उन्होंने उसका claim वो नहीं करा validate because they had taurine in Red Bull, which is an amino acid and which is an unusual thing to put in a drink, but apparently it is totally safe to drink. So that happened over there. So originally it was supposed to be launched in West Germany, but they ended up launching it in Austria. And for the first year, so Red Bull created this association with that it basically Red Bull gives you wings, right? So eventually, Red Bull was supposed to be marketed as a drink which was meant for extreme people, or it was always associated with doing something extreme, or it was always associated with doing something like that is full of energy, or if someone needs energy at that point of time. But what ended up happening with Red Bull was that it originally became famous in bars in Austria. Like people used to have vodka with Red Bull, and originally it gained its prominence over there. From there, it started getting famous. And once they had the cash flows, so the founder always had this image that he wants to associate Red Bull with extreme. So you must have seen one thing that you in all the advertisements of Red Bull, वन थिंग इज प्रिटी क्लियर दैट यू जितनी भी ऐड देख लो रेड बुल की आपने ऐड में कभी ये नहीं देखा होगा दैट रेड बुल एज एन एनर्जी ड्रिंक इज बीइंग मार्केटेड that basically you should have Red Bull or stuff. You will always see that it is being marketed with a sports event, or it is being marketed with an extreme sports event, right? Basically a guy doing the world record, or basically falling off from 60-70,000 feet. So that was also one of the stunts which Red Bull pulled off. So it is always marketed towards that, and it has a very defined age cohort. So generally, people between 25 to 40 are the target age population of Red Bull, and these are the people who generally basically these are the people who generally drink Red Bull a lot. Now, this was how Red Bull started getting famous. And you must have also observed that अभी तो flavors आने लग गए Red Bull में, but always Red Bull had two classic flavors. One was a sugar-free one, and one is the one which is the classic flavor that is dark blue and silver in color. Now, this was what Red Bull spotted in Europe, and it conquered Europe, and then it entered the North American territories. Now, there are always white spaces in the market. White spaces, I mean to say, कि it's not always that market is conquered by like one industry is conquered by a particular company. But in such areas, there are always white spaces. Like Red Bull identified the white space of providing something extreme, or providing that short boost of energy as compared to comparing it to a Coca-Cola. Even though Coca-Cola also contains caffeine, but the caffeine content in Red Bull is much higher because it wanted to create that association. And actually, funny thing is, Red Bull failed all the taste tests. In the blind taste test, Red Bull failed. Basically, no one wanted to have a Red Bull. So such is our association with that can, that this will provide us that short boost of energy, basically, if you drink Red Bull. Now, similarly, there were white spaces in the market, and this is how business strategy comes into play. Now, compared to Red Bull, there is also this company by the name of Hansen Beverages, which manufactures Monster beverage. Like you must have seen that Monster energy drink too. And it's been almost so last 2 decades. This has been the best performing stock that has been listed in US. And over here now they again spotted the white space. Now they cater to an entirely different age group, and they sort of associated themselves with actually more extreme, like being more extreme than that. So you must have seen the packaging of Monster beverage, and you must have seen those three claws of a monster or something. And secondly, the caffeine content is a bit higher, and especially the size of the can is also a bit larger when we compare it to Red Bull. Now, this is where Monster did the trick that in spite of having a like larger size, they also launched a lot of flavored drinks, right? And this became very very famous with the with the fraternities in basically with the basically with the fraternities in different universities in US, and they started catering to that young teenage crowd, right? So actually there have been 2 or 3 sad deaths as well after drinking Monster because of because of caffeine overdose. So that is actually a thing that where people might get heart attacks or stuff. But a lot, they catered to young population, and they sponsored all those events like Monster Truck. They sponsored too, and they also sponsored all the skateboarding events. This is how they identified their white space, like larger in size, more extreme in association, and secondly, targeting an age group that is not targeted by Red Bull. So they targeted an age group between 18 to 29. This is how they spotted their white space. But actually, it is claimed that people between teenagers between 14 to 17 also drink a lot of Monster. So this is how the association came into being. And this experiment I also did with two of my friends who came back after basically after, one was studying in Switzerland and the other one was studying in US. So both of them, I asked them ki which मतलब कौन
Krishna, can you hear him?
Nope. I think that's glitch number two. Let's get him back.
Ish Mohit, we're going to move you to the listeners and then just pull you back up.
Yeah, you're back.
right,
Yeah. It can be very up and down. Sometimes, like 4 or 5 times, you'll be booted out. On a bad day, like with Sahil, I think we did 24 or 25 times.
right, right. So I'll just resume from the Monster story, right? I was there, right?
Yeah, you were telling us about how you asked your friend in the US as to which brand he preferred.
Right, right. So most of them in fraternity or most of the university students, most of them prefer Monster over Red Bull over there because that is a particular age category they are targeting. And Monster again, they did a distribution tie-up with A and B, and from there it has really grown a lot in last 2 decades. Now, now we talked about two energy drink companies within one same industry. Now just imagine there are so many white spaces which already exist in businesses that a third energy drink also came into being after 2007. So one of the Indians who was basically living in USA, he basically he had the Red Bull in one of the conferences, and he recognized that for having this short of energy, I'm consuming so much of drink, like some like I'm having such a big can of 250 to 300 ml. What if I can compress this to a 10 or 15 ml shot, right? This is what he thought about, and this is how 5 hour energy was born, which is again a multi-billion-dollar brand. Now, white spaces and markets, so it's just like natural species. Wherever you find opportunity to sort of reproduce yourself, or wherever you find your opportunity to sort of conquer the space, this is something similar ends up happening in the world of business. So, talking about 5 hour energy, so 5 hour energy did something very very clever. So they marketed themselves to especially people who were working in jobs who needed sort of like, as the name says, 5 hour energy, right? If they're feeling lethargic at their jobs, or if they want to feel revitalized, so you can have just one shot of 5 hour energy, right? And it's one shot that has 160 to 170 milligrams of caffeine, and that is like 15 ml, like that is 2 or 3 sips. So again, this is how they marketed themselves, and their target age group was people above the age of 32 to 33. Right? They started targeting people who weren't consumers, particularly of Red Bull, or who weren't particularly consumers of Monster beverage, and this was how the brand was born. So again, they spotted one more white space opportunity, and they positioned their brand in such a way that all the 5 hour energy drinks in US are kept close to the billing counter, that if you want, basically if you want to grab it, then you can grab it on the go. So this was a strategy this company implemented, and Monster beverage and Red Bull tried basically copying the strategy. They also launched their own small products, but there wasn't any comes up, so they failed, and actually they sort of withdrew their brand after only 1 year, because the age population which associated with Red Bull or a Monster beverage was quite different with the age population that associated themselves with 5 hour energy. So point is that within a single industry, which to an outsider might seem saturated at the beginning, there could be such different businesses that can be born in the span of last 3 to 4 decades. And this has happened right in front of us in a boring industry as such as energy drink, right? So over here, so this is why I think the essence of business strategy, or the essence of strategy when it comes to assessing countries, comes into play. And linked to this recently, so before I come to investing examples and stuff, so I've been reading this book, How Asia Works. I've just finished this. So this is one of the seminal works which I will suggest almost every investor should read. मतलब normal लोगों को भी पढ़नी चाहिए, सारे investors को भी पढ़नी चाहिए, because this talks about that how a set of Southeast Asian countries, or a set of North Asian countries, ended up becoming export powerhouses within a span of 4 to 5 decades, right? And how a set of few Southeast Asian countries, in spite of having much larger resources, or in spite of having much more natural resources, didn't do anything because they didn't follow the right strategy. So, three pillars of all these export houses have been built on the three strategies, that is agriculture, manufacturing, and third one is financial regulation. So agriculture. So I'll just talk about agriculture and manufacturing. Financial regulation, I'm still on that, on that chapter. I'm yet to finish it. But I was able to draw association with what Michael Porter says, or what happens in the business world. That exactly that ends up happening on the country level. So in terms of agriculture, so let me give you an example. So Japan as a country, the entire land of Japan, only 14% of the land is cultivable. Now, if I compare this to Malaysia, so in Malaysia, as an entire country, more than 30% of the land could be cultivated. And if you look at yield of the crops, so Japan has higher yield of crop when we compare it to Malaysia. Now, simple understanding.
Glitch 3, Krishna.
Yeah, looks like it. Looks like it. Let me try and make Ishmoet a co-host, because I just got you know feedback that one minute that making a co-host might make it easier. Yeah, yeah, you're audible now.
Where was I? Malaysia, somewhere, right?
You were talking about the yield,
Right.
the
Japan and
high.
Malaysia, right? Right.
Yeah.
Right. So, just 1 second, just collecting the thoughts again. Uh, right. So Malaysia as a country had lower cultivable, like had a higher cultivable land, but lower yields when we compare it to Japan. Now, reasoning was simple that all these successful export powerhouses, whether I talk about South Korea, whether I talk about Taiwan, whether I talk about Japan, or whether I talk about China post 1980s, all of these countries successfully undertook agricultural land reforms. Because until or unless a country is able to increase its yields on agricultural land substantially, the manufacturing industry won't get supported. The income of the entire rural population won't get supported, because initially, whenever a country gains independence, or whenever a country comes out of any ruins, majority of the population primarily in all these countries used to depend for sustenance on agriculture. So this is one of the things that these countries recognized early in their journey. Like China recognized late after Deng Xiaoping came in, but still they have grown by leaps and bounds. But just to give you an example, like in Japan, and on all these basically land reform authorities, so where the difference arose, that on all these land reform authorities, all the landlords, which you were people who used to own like acres of land, they weren't allowed to sit on the land reform authorities. Whereas peasants or people who were tenants or people who were from a peasant background, they were the ones who were sitting on the land reform authorities. And they did equal distribution of land. So this was also an estimate that was done that whenever sort of like in countries like Philippines as well, in countries like Philippines again, what happened was the on the land reform basically body, all the landlords were sitting. So it led to unequal distribution of land, or more or less the same policy continued. Similar thing ended up happening in Malaysia, and similar thing ended up happening in Indonesia. So in such countries, you will always see inequality of wealth. And in such countries, you'll always see that a few large people control a lot of wealth. You might not have seen a lot of corruption cases. So Malaysia, you might have seen that corruption case that emerged out of 3MB, right? So this is how I think agriculture forms the backbone of the economy. And Japan, Korea, Taiwan, and China, all these four countries were successfully able to distribute the land and were successfully able to increase the yields from their land. Malaysia still hasn't done that. Indonesia still hasn't done that. And this was a strategy which the political leaders of these countries recognized early. Now, coming to the second part of the strategy, that why they so if you if you must have heard about these companies, so all of us have heard about Suzuki, all of us have heard about Hyundai, all of us have heard about Samsung, right? So these are some of the brands which have just or these are some of the manufacturing powerhouses in last 3-4 decades which have come into play. And there's also this South Korean company by the name of POSCO, which is world's fourth largest steel producer. So again, what ended up happening, so let's just take example of one country, that is South Korea, right? So in South Korea, after the Korean War and stuff, in 1960s they had a premier or a prime minister by the name of Park, right? And that prime minister, what he did on the first day of his tenure, that he sort of rounded up all the industrialists, arrested them, and made them sign a bond that all your wealth is the state's wealth, unless or until you do what we say. And actually the regulations and the stipulations they sort of applied on their own entrepreneurs were just mind boggling if you think about it. So they created this entire idea of export discipline, export incentives, and companies like Hyundai and Samsung were born over a period of time. So such was the export discipline and export incentive reinforced or sort of put up by these countries on their own entrepreneurs, was if you didn't export this much amount, or if you didn't export that much amount, your credit lines were taken away. That was a type of export incentive they enforced on their own entrepreneurs. So they started feeding their winners, and the losers eventually got weeded out. But this is how some of these companies grew. And actually they had this they also had this regulations for them, that whenever you were basically investing in domestic capacity, you also had to sort of cater to the export market. Now, whenever the earnings were reinvested for country's benefit, so just to give you an example, POSCO is fourth largest steel plant in the world, and perhaps the lowest cost operating plant and one of the most integrated plants because it's just situated right next to the port. Similarly, there is a city in South Korea by the name of Busan, and in this city, if we talk about Hyundai, so Hyundai has emerged as one of the largest automakers in last 3 decades, right? In a world of Ford and in a world of General Motors, we have seen emergence of MNC companies from Asian countries. And these companies were given heavy incentives. And these incentives are not just linked to sort of exporting, but these incentives were also linked to the policies of protection. Now, suppose if Ford wanted to come and sell in South Korea, or if Ford wanted to come and do a joint venture. So, this is the policy that was adopted by China as well, that you had to share your technology to do it, right? There is no joint venture without any technology sharing. So all these countries took the technology. Similarly, when IBM wanted to sell in Japan in 1950s, so Japanese government laid out a very stringent regulation over them that you can charge 5% of royalty, but you need to have a domestic partner.
Krishna, can you hear him?
Yeah, yeah, you're audible now. You were on the partners that they need a local partner.
Yeah. So basically, even when a company like IBM wanted to sell in Japan, so they needed to have local partners, and even to those local partners, you had to transfer your technology. So again, this was a conscious strategy of creating an export hub, right? And over a period of time, these countries had this long-term thinking and so just to give you an example, Hyundai automotive area made losses for almost 10 to 11 years, but they were given heavy government incentives. Now, drastically, let's compare this to the example of Malaysia. On a different note, now Malaysian entrepreneurs also had this opportunity. They also made this much money, but they didn't reinvest in export capacities. They started investing abroad. Some of the Malaysian entrepreneurs opened casino in Macau. Some of the Malaysian entrepreneurs bought land, like land in foreign countries. So that wealth wasn't reinvested in the country, and this is why we do not hear of any Malaysian exporters or we do not hear of any Indonesian exporters. And the funny thing is that even in Malaysia, the low end value chain, basically processing industry, which is focused more towards exports, even that is run by the South Koreans. Now, this is consciously a strategy that countries adopt. This is also an example of conscious strategies that business target, and this is how the element of business strategy and strategy on the level of country starts playing out. Now let's come to some examples. Let's come to some Indian examples as well. And let's sort of talk about that, what can sort of happen in the Indian context and why companies do things differently. So one thing's for sure, I think I'll just discuss two brief concepts before I go into more and more Indian case studies of listed space. So Michael Porter's five forces analysis is a very good tool to sort of assess how the industry structure is looking like and how and you have to think about that what the company is doing to basically assess the industry structure or how the industry structure is changing around the company all the times. So Michael Porter's five forces, again, so simple five forces. First is competitive rivalry, that how strong or how stringent the competition is within the industry. Second is availability of substitute goods, that whether there are substitute goods basically available or not for a particular product. So availability of substitute goods is a real threat actually in the real world. If you think about it, 12 years ago we used to store our data on basically CDs by Mitsubishi. No, sorry, Mitsubishi. I'm saying this company, Philips or Mosabare, right? So we used to. So I always get confused between Mitsubishi and Mosabare. So right. So we used to store our data on Mosabare. Then availability of substitute goods. Then we started getting pen drives by Kingston or basically Transcends. Then from pen drives, some people went to hard disk. Then we got cloud. And now I don't see people carrying around a pen drive or that to say even matter a hard disk. Most of the storage is done over cloud, right? So availability of substitute goods is a real threat in the real world. Then barriers to entry, that how stringent the barriers to entry are within a particular industry. And so barriers to entry basically end up mattering a lot. So see, there could be temporary pools of profit that can get created, like this ethanol play. But as such, there is no particular barrier to entry within the industry, right? So I always sort of classify these companies into structural multi-baggers or basically transitionary multi-baggers, like transitionary companies or structural companies. So transitionary is something that is there if there are no barriers to entry within a particular industry, right? So some of the API companies, right? So some of the API companies where they manufacture and sell APIs, over there I'm not able to recognize any barrier to entry. Suppose if you talk about Solara Active, right? Now, Solara Active says that we are going to backwards integrate into isobutyl benzene and we are getting into regulated markets and we have fixed pricing. Now, IOLCP comes up and say that we are already backwards integrated into isobutyl benzene. Now we are also going to start selling in regulated markets, and 75% of our business is coming from long-term contracts. Now, SMS Pharma comes up and say that we have put up 200 crores of capacity for basically ibuprofen, and we are also going to sell in regulated markets, right? So you can get the point that barriers to entry within that particular space aren't that high, right? So markets are rightly skeptical when they view that all these companies are in that particular commodity. But now, what usually ends up happening in bull markets, then basically the narrative changes that the company will get into some basically some other product divisions or something. But again, over there as well, if you're not able to answer that, what is the right to win for this particular company, then those investments usually end up as trades, because if you do not have that particular answer, just to give you this example of Solara Active, so we actually asked a few questions to the management as well, that they're launching so many incremental DMFs. So what is your strategy? Do we have any low cost competitive advantage in any of those particular DMFs? So their strategy was that it's an umbrella sort of launch. Umbrella launch means it's a wide launch. There is no particular low cost advantage like they had in ibuprofen, which made them survive for a lot of years. There is as such no low cost competitive advantage in a particular DMF. So then that gives you an idea that this business doesn't have a defined competitive strategy. People can say they are doing grams or stuff, but if you do not have the answer for right to win, then those investments usually end up being trades, in my opinion, if you do not have that right answer. Then fourth and fifth thing, that is bargaining power of buyer and bargaining power of suppliers. So we'll sort of look at more examples when we go beyond. So just before I come to the like the basically more examples and more case studies at how some businesses have defined their competitive strategy in a very strong way, whereas some businesses which haven't. So just before we go there, one thing to recognize is that one thing that all of you should do as well, which I have started appreciating more in last 2 years. एंड एक्चुअली जब बंदे को मार पड़ती है तभी इसकी अप्रिसिएशन और आती है. सो you should classify the businesses that you own in terms of the nature of customer or the clientele they are serving to. So I typically like to classify it in 4 forms. That is business to business, business to government, business to consumer, and business to institutions. Now, business to business, I have examples of the CDMO industry, the IT industry. So these are examples of business to business. Even the chemical industries, basically they're selling to they're basically selling to a business. And in such type of like industries, there is some element of working capital being high, because most of these companies are exporters in nature, but there are many Indian examples as well. Second is business to government. Over here, we have companies which are primarily in infrastructure segment. We have companies like PSP projects, which again, return ratios are solid. But because earlier they were catering to the private sector when they won that project for Diamond Exchange, but now they're getting into more and more B2G contracts. So market is always 5 steps ahead of us in terms of thinking about the second, third, and fourth order consequences of a particular event or a particular activity. Right, that if they enter more and more into B2G contracts, so what happens to the working capital cycle? What happens to the incremental return on invested capital? So market is always thinking about those things. So one more example over here. I have 2 examples over here. One is that of APL Apollo. I think Saket ji is also on the call. So you must have seen in APL Apollo's case that when they shifted to a cash and carry model. अब इसका third, fourth, and fifth order consequence है काफी बड़ा. When they shifted to a cash and carry model, what ends up happening on your balance sheet? So first thing that ends up happening on your balance sheet is that your trade receivables reduce, right? And if your trade receivables reduce because they used to take short term debt for financing their working capital, your balance sheet ends up becoming lighter because like equity and liability side पे debt नीचे जा रहा है and right hand side पे जो assets की बात कर रहे हैं वहाँ पे working capital need घट रही है. So your in your denominator, so when we sort of calculate return on capital employed, so in your so basically in your denominator, if the capital employed is reducing and आपका अगर ऊपर वाला जो EBIT है numerator में that even remains the same, then your return on capital employed ends up improving. So this is again one of those strategies or one of the second or third or fourth order consequences that you could have sort of thought about ki why this business is doing this particular activity. And this happened almost 15-16 months ago. So I think at that time we also released the video on APL Apollo, and this is how the business APL Apollo's ROC went from 20% to more than 32% right now. So that is also one of the strategies. Then third type of business that we have is business to consumer, and final business that we have is business to institution. Now, business to institution businesses are particularly interesting. So these are tender driven businesses usually. So if I talk about Laurus Labs ARV business, so that is a tender driven business, right? Which has a 3 to 4 year tender cycle. So always there is this element of uncertainty around the basically around the sales and around the cash flows. This ends up creating a lot of opportunities as well if Laurus Labs is the lowest cost player over there. So this helps you to identify those opportunities. But I particularly like to classify the businesses into these four categories, and I like to think about what can be the second and third order or fourth order consequence if a business is making some structural change. So one more example. So if I just talk to you about this. So if we just look at PI Industries, right? Now PI Industries, what they've been doing is they're improving the asset turns, right? From the same asset, earlier they were getting 2x asset turn. Now from the same asset, they'll get 3x asset turn. Now just think about ROC or return on capital employed, or just think about the structural efficiency of a business. If again my capital employed turnover improves, right? अगर मैं same 1 rupee के asset से अब 3 rupees की sale कर रहा हूँ. पहले from that asset of 1 rupee, I was doing sales of 2 rupees. What ends up happening is that my efficiency of the business automatically ends up improving. So these are some of the things that you can also recognize early in your journey. And just a second, I'll just have a sip of water. Right. Any questions, Sahir or Krishna? Free to button.
Yeah.
I hope it is going well. Exactly the
Krishna,
range.
yeah, it's going really well, man. So super engrossed. Do you want to go first, Krishna, or should I?
No. Sahir, you go first. I'll go next.
Okay, so Shmoit, you were talking about barriers to entry and how they impact transitionary or structural multi-baggers. I wanted to know when, in the case of a transitionary multi-bagger, and you were talking about, you gave the example of ethanol. Um, how important is first mover advantage, and how important is scale in that? Ishmoit, I think you're on mute.
Yeah, I think he's grabbing a sip of water.
Oh, shit. Sorry.
Yeah, you're audible.
The fifth time. So if you can repeat the question, please.
So Ishmoit, you were talking about how some multi-baggers are transitionary and the others are structural. So, and you mentioned ethanol and how there aren't very many barriers to entry. So, in the case of a transitionary multi-bagger, where there are no barriers to entry or relatively less barriers to entry, how important is scale and first mover advantage in those situations?
I think I'll give you two more examples of the businesses that I've tracked very closely in the past. So whenever such things happen, so one thing that you have to be sure of is that you have to track demand and supply and the pricing as well. So let me give you an example of Sterlite Technologies. So this is one of the businesses that I tracked very closely, and I was very clear that for the existing players who are there in the world, there are no barriers to entry, right? So they were close to 15 to 16 players all across the world, and all the existing players in the world, when the pricing of fiber optic cable was high, and so they all of them announced sort of capacity expansions. And there was just one bidding in China where the prices of fiber optic cable declined. And once that news was out, just imagine, Sai, the stock fell by 30-35% within a span of 1 week on no news. Just on that one single piece, that जो इस टाइम पे बिडिंग हुई है चाइना में, लाइक जो उसके प्राइसेस है फाइबर ऑप्टिक के, वो कम है, राइट? So markets are very, very clever. And in the next round of results, for the first time, Sterlite Technologies announced that in last 5-6 years, this is the first time our order book has reduced quarter on quarter, right? And they said that we do not expect any pricing issues. But you could see that 14 or 15 players in the world all across have expanded their capacities. And then they started facing the pricing issue as well. So again, in such businesses, so personally for me, whenever it comes to a commodity like ethanol ho gaya, ya fir aisa business ho gaya, even if I say phenol I classify it as a commodity because phenol is a commodity at the end of the day. In such businesses, tracking demand, supply, and pricing actually becomes important. Now, suppose tomorrow Reliance Industries comes up and they say that we are going to expand in phenol, right? We are going to set up a plant of 2-3 thousand crores. Do you think Deepak Nitrite would get a 35-40 thousand crore market cap? The answer is no. It's toast, right? So in such businesses, tracking that element of demand and supply where barriers to entry are very, very shallow, it becomes very, very important. But vacuums can always get created. So one of the market vacuums that got created was in the shrimp industry. So we had this EMS disease in Vietnam, and for almost 5 years, there was a vacuum in the industry between 2010 to 2015 to 2016, where the Indian shrimp exports grew by 25-30% per annum, and Avanti Feeds was almost a 200-300 bagger. So whenever you're looking at such businesses or whenever you're taking exposure to such businesses, one thing which I particularly like to do is I like to limit my allocation, and secondly, I particularly do not have so many such companies in the portfolio because tracking so many companies becomes a tedious task because stock falls by 20% and second day you get to know some commodity pricing is down or some new competitor has entered. This is one of the reasons why I couldn't make myself to buy Borosil, this company Borosil Renewables. It's into solar glass, the manufacturing of solar glass. Similar to phenol play, right? Anti-dumping duty is there. Some of the competitors weren't there. 2 or 3 players have recently announced expansion too. So if you just think about the industry structure, yes, Borosil will expand the capacities by 3 or 4x. But do you really think that they have the pricing power? Like my answer is still no. I'm like people who have made money, like thumbs up for them, a pat on their back too, because thoda lonely profession. If you make money, exceptional. And I've actually made a lot of money on Deepak Nitrite. So again, that is also I still classify that as a transitionary multi-bagger until or unless they get into they're able to get into downstream and get into really high margin products. So this is my short take on that side.
Thanks a lot, man. That was great. That was amazing. Krishna, do you want to go next? And
Yeah.
I have one last question about what Ishmohit had spoken about. So I'll ask after you.
Sure. So, Ishmohit, my question is a little bit more, going back to the sort of overarching theme that you had brought up when you spoke about Red Bull and Monster and 5-hour energy, which is, the key component of business strategy is how do you add value, right? And I wanted to know from you if, when you're looking at any business strategy, what are the quickest ways in which you can identify is this a good strategy? Are there any thumb rules, any mental models, or any principles that help you?
See, I think some of the thumb rules that definitely end up helping you is first that if you understand the business, you can sort of see. I am of the contrary opinion. People say understand the return ratios, then look at the business. I think if you understand the business and then you sort of look at the return ratios at the same time, you start to appreciate what is really behind the moat of this business. Now, let me give you 2-3 more examples. Now, again, I can be horribly wrong over there. So I'm also a learner and I'm completely open to being wrong. But I've been tracking all the three companies within the fluorine space for a period of time now. So if I just talk about Naveen, SRF, and Gujarat Fluorochemicals. Now, SRF has been a massive multi-bagger. So has Naveen been. Gujarat Fluorochemicals has also done well. But like to answer your question, Krishna, over here. So like now SRF and Naveen had different business strategies. SRF, so between 2015 to 2018, what ended up happening in the agrochemical industry across the world, that we had a downturn. Companies like PI Industries didn't grow, and because all the major agrochemical majors were consolidating. But SRF had generally a more aggressive management. And what they ended up doing is that so this is actually the first time I've actually seen this happening in terms of analyzing more and more businesses. But they sort of put up 2,000 crores of capex just to expand the capacity when the cycle turns up, right? I've seen companies actually being very trim and basically being very asset light at such moments. But SRF actually ended up expanding the capacities. And once the cycle turned upwards, they reaped the benefits because the chemical business grew at 40-45% CAGR, and we've seen how the stock has reacted. But Naveen, at the same time, they didn't expand. Now, I'm not saying that is the wrong strategy or basically the right strategy, but this is why they were given a very conservative tag in 2018, 2019. If you talk to any investor over here or on this forum, or anyone who has seen the like journey of Naveen Fluorine, they would tell you that people used to consider this to be a very conservative management. Like in the case of SRF, they were putting so much of money, but Naveen was it. But now here is where the distinction comes in. Now if you look at the return ratios, Naveen is doing 23-25% ROC, whereas SRF is doing 14-15% ROC. But now Naveen is investing into capex, even though SRF has also announced a 3-4 thousand crore capex. But Naveen, for its balance sheet size, current net fixed asset block is close to 600 to 650 crores. I think 550 crores, that is the right number. And they are doing a capex of almost 800 crores in next 6 quarters, right? And the entire capex is for products which have 28 to 30% EBITDA margin and which have higher asset turns. So the management carefully chose to sort of announce capacity expansion. So 2020 में capacity expansion announcement चालू हो गए थे, and they waited for those projects where they thought they can have higher asset turns and they can expand their margins. So they didn't go for projects where the asset turns are lower. Now, if you look at the business strategy of both the companies, SRF on a consolidated basis has a 0.8 to 0.99x asset turn for the chemical business, whereas Naveen in some of the plants has 2.25 to 2.5x asset turns. Now, this is why both the businesses, even though SRF stock has done phenomenally well, but I ended up investing in.
Let's bring him back.
Guys, please be with us. Please stay with us. Ishmovit is gonna come up as a speaker shortly. Hey Krishna, what an advertisement for Clubhouse, man.
I swear. I swear. I mean, this is his Twitter Spaces debut. Imagine how he's gonna feel going back. There he is.
I think you guys have missed thing. I mean, it's also teaching people how to be patient long-term investors. So I guess people do his job for these kind of discussions.
Yeah, that's also true.
Am I audible?
Yep,
Yeah.
yep.
Oh, great.
You're
Finally.
audible.
This is full of bugs, but still, I think it's fun to have discussions. Right. So,
He's actually teaching us to deal with volatility.
right. Actually, right. Where were we? I think someone asked a question as
You were
Yeah.
You're
saying
talking about
how you picked Naveen over SRF, and then I guess that's when it cut off.
Yeah. You spoke about 550 crores net block, 800 crores capex with 28 to 30% EBITDA. You had just told SRF's asset turns was zero point 0.8 to zero point 0.9, and then you were talking about Naveen being around 2.2, and then you got cut.
right. So I think that is the essence that management actually announced capex when actually they had confirmed contracts in hand. If you look at the entire capex, that is backed by confirmed contracts. If you look at SRF, now their capex is running at full utilization. Still, they are doing a 15% return on capital employed on the chemical business. So eventually, the truth has to meet the return ratios. This is what I end up thinking. Now, like two, three more examples in terms of business strategies. So, like basically, Krishna, you asked. So, if you look at if you've been to US, so I haven't been. So I asked my friends, right? So, have you tried the burger from In and Out?
No, no, no. I haven't. I haven't. But I've been there.
Right. So apparently, so In and Out is a burger chain over there, and like it's been a burger chain there, like over there. It's like it's a very it's a very famous burger chain over there, and their USP is that they have freshly made burgers. Right, customers usually have to wait for 5 to 10 minutes for their order, or 10 to 15 minutes. Unlike a McDonald's, where you basically you're given your order in 1 or 2 minutes. So now that is their USP. Again, they identified a white space, and they basically sort of stuck to that, and that is more of a regional brand. But those people who eat In and Out, they swear by In and Out. They usually do not end up going to McDonald's. So actually, there are these fan clubs on YouTube. If you check the In and Out burger, you'll see how much people are crazy about the In and Out burger. That people are traveling like from around the world just to have that burger from In and Out. But again, that is a business. That is a conscious business strategy that they pick. One more example is like how many of you order Domino's usually? Like Krishna, you must order. Kan, you must also order. Sahir, you must also order, right?
Yeah, yeah, for sure. Today only at Suru's, Suru did the QSR webinar, right? So, so I tweeted immediately that this is making me mad hungry.
Right.
I'm ordering some pizza right now.
Right. See, now they realize this early in the game that if you look at this Porter's five forces, right, bargaining power of suppliers, they didn't want to get squeezed by the food aggregators. So you either end up ordering through their application, or even if you order via Zomato, or if you order via Swiggy, then the order is then the order is fulfilled by a Domino's delivery person, right? Because they saw this early, like they saw this 2 3 years out, that when these aggregators gain scale, what can eventually end up happening is that they sort of start extracting more commissions, right? So they never they never let this happen. Now this is the exact problem they're facing in Hong's Kitchen. So I actually went to their first ever store of Hong's Kitchen to do scuttlebutt in Gurgaon. I sort of basically wahan pe, we also tried each and like we tried each and every dish that they had. But over there, because they do not have that much of size, they are not able to negotiate good terms with the food aggregators. They do not have that bargaining power yet. And again, this is how business strategy evolves as your size also grows, right? So if you have any questions, Krishna, on follow up to that.
No, so just to sort of sum up the example that you spoke about in terms of strategy. So some of the things you spoke about were adaptability, identifying a white space, and an opportunistic management. And then you spoke about two different types of being opportunistic. One is being aggressive during a down cycle, and the other one is sort of expanding when the customer has already basically made the demand clear, and then you're basically expanding in a certain way on their money
Right.
or on guarantee money.
And I think one of the things that you have to understand about, so again, one more case study. So this is not from a listed company. So this is from a company by the name of Xiaomi. So they manufacture this MI phones. So recently only there was an article in one of the publications. Now what has ended up happening is that strategy also evolves over a period of time. So 5 years ago, the average price of a mobile phone, or the average people like the average price was somewhere less to 10,000 rupees. That was the most commonly owned phone. But now that has inched up to 15 to 16,000 rupees. Right now, people are buying more expensive phones, and it has come close to 15 to 16,000 rupees. Now, Xiaomi is the market leader in the in the lower end, that is between 5 to 12,000 rupees type market, and they have also seen that this trend is playing out right now. Now they have sort of segregated their brand. So Redmi is the brand that is purely meant for the economy class, and they have rebranded the Mi brand, have launched themselves as Xiaomi to cater to phones which are worth more than 40 to 50,000 rupees. Now, to sell a 40 to 50,000 rupees phone, now over there, Apple has completely dominated the market, like 40 50% of the market share is with them. To actually conquer that market, you need to have an offline presence. So Xiaomi didn't have this online or like offline presence ever, because it was an online only brand. But now we'll see exclusive company only stores opening up. So now the thing is how the strategy plays out, that is yet to be seen. But I still think that people won't buy a Xiaomi phone worth 40 to 50,000 rupees. That is how I'm thinking about it. Because when OnePlus was launched, so sort of they differentiated themselves that they are the smartphone killers. That within a pricing range of 30 to 40,000, we'll give you the features that a 60 to 70 or a 80,000 phone has. Right. So they positioned themselves very very cleverly. And now from there, they're slowly climbing up the value chain. But for Xiaomi to climb up the pricing perception from 5 to 10,000 rupees to almost 50 to 60,000 rupees, I think that is again, as an investor, you can recognize that these things are a little difficult to happen. That in the world of business, these things keep playing out over and over again, right?
Yeah, absolutely. I think that was a fantastic example with Xiaomi, because no matter what Xiaomi does, like I can't imagine myself going out there and picking up a Xiaomi phone, because in my head there is that, that association that Xiaomi is like trying to make things cheap. And in that way, it's giving you, it's trying to make things affordable, and in no way is it cutting edge. So if I identify as a cutting edge consumer, I will go out there and pick up an Apple or a Samsung or a OnePlus, and focus on those companies, because I have that brand perception of them being cutting edge. But any other player coming in, unless there's like a collaboration, or something like that, with a brand which already has, a lot of value, sort of like OnePlus did with Hasselblad. I don't think I would move to that brand. And even with a collaboration, I think I would think a couple of times, because my perception is so anchored in things being a certain way. So fantastic example, Ishmoit. I think you can continue with your presentation. I've
I had one quick question.
yeah, sorry.
Yeah. So yeah, Shmoit, going back to when you were talking about Red Bull, Monster, and then 5 Energy. So a big reason, I guess, that you mentioned that Monster carved out a white space was the distribution network with A and B. Uh, Now, how important is a great distribution network, a large distribution network, and carving out a white space? And in terms of white spaces, can you give like um, Indian examples similar to the Red Bull, Monster, and 5 Energy example where these niches have been carved out, or these white spaces have been carved out, please? Thanks.
I think one of the good examples that I can give you of a good strategy and a bad strategy as well is that you must have seen that Tata Consumer has recently acquired Soulful, right? One of the
Yeah.
primary reasons for acquisition is that, see, your product is good, but you cannot sell more if until unless you expand your distribution. So I already have the distribution, but I do not have that product profile with me right now. So I'll just acquire that product. So we'll see Tata Consumer making more and more such acquisitions. So again, one of the classic examples is actually from the video today only, is that so this is not linked to distribution, is this is linked to how bolt-on acquisitions work. And so actually distribution में ITC का भी example है, recently जो spices का brand acquire करा था उन्होंने South India से, so that was a good acquisition in my view. And even in ITC's case, you must have seen how they acquired Savlon and made this more than a 1,000 crore plus brand, right? So that is also good. That is also a good example. Like earlier, if you are just a regional brand, so if a national pan-Indian brand comes in and if it just scales up your presence across, then actually FMCG ends up becoming a business of scale as well. There are very, very few listed small FMCG companies which are doing extremely well, apart from an Amrutanjan maybe, right? So you must have seen this. Jyoti Labs has been struggling for growth for last 6 years, right? Because beyond the scale or beyond beyond a period of time, if you do not have that distribution heft or the ability to keep launching new and new products, FMCG business is damn difficult, right? If you listen to Nestle India's management, that why I respect Nestle India a lot, right? Because if you listen to Nestle India's management, they keep saying that hardly the success rate is somewhere close to 0.06% for launching successful products and scaling them up. But if a company is able to acquire a bolt-on acquisition, suppose if I do not have that in my portfolio and then I'm able to scale that up, then that becomes a very, very interesting mental model to have. Like ITC did, like basically ITC recently did with a like South Indian brand that was into spices. Then I give you the example of Tata Consumer and Soulful.
Whoops. Yeah, let's bring him back. Yeah, Tata Consumer and Soulful.
Right, which was a regional brand, and also ITC basically did this with Savlon as well. Now, so Sahir, I'll just expand your question to a little broader sense, and I will actually ask or sort of think that investors should also inculcate this mental model with them. Is that is of bolt-on acquisitions. Now, so Warren Buffett used to give this, like still gives this mental model, that is, investee companies keep making bolt-on acquisitions, right? So whenever basically whenever their investing company doesn't have some capabilities or basically they basically do not have something with them, so they prefer to acquire, right? So over here we have two classic examples. So one is from IT industry. So I think Ameya is also on the call. He's an IT expert, so I think he can correct me as well if I'm mistaken. And second is from the chemical industry, which I've been following for a long period of time. So from chemical industry we have this example of Naveen acquiring Manchester Organics. Now, this Manchester Organics has more than 50,000 molecules catalog. Now, that ends up becoming a foot in the door technique. In 2011, I acquired Manchester Organics when it had a 40,000 molecule catalog, but now it has more than 50,000 molecules in its catalog. Then that ended up becoming a very good bolt-on acquisition because that is a foot in the door technique through which I can go to Western innovators. Second example is over here that is of Mastech acquiring Evosys, and now Mastech is looking for an acquisition in the North American region. So today only I discussed Mastech's acquisition of Evosys and how the number of clients they got access to and their actually go to market strategy sort of became very defined and cutting edge after the acquisition. So just sort of I made the answer a little broader side.
Perfect.
Right.
Perfect, man. Thank you. Thank you so much.
Right. So just coming back to actually you asked the question on scale, right? So actually I personally learn through case studies because I like to observe what is happening in real business world. There is sort of this thing as well. If a business is able to scale in seemingly a commodity, in seemingly a commodity business, and if if the competitors are lethargic, then just through execution that business is able to sustain over a period of time, even though pricing might be out of his control. I'm not saying this will be a 30, 40, 50% ROC business, But again, really depends ki how it is able to execute. So over here, I like example of Gujarat Ambuja Exports Limited. So currently they have this capacity of maize crushing of 3,000 tons per day. Now again, this is a commoditized market where you're just crushing maize, like producing starch derivatives and stuff. But now what ends up happening, as Sahir you mentioned, that if you gain so much of scale, and if I buy inventory in one go, right, then I'm able to get cost benefits. Because if I'm buying so much inventory, if I'm the largest buyer of maize in the country, I'll get cost benefits. Similar thing happened with APL Apollo. Because they're the largest buyer of HRC in the country, they get 2% cost benefit, right, as compared to their peers. So in such a business, either you need to scale up a lot, right, or your competitors have to be weak. In APL Apollo's case, or in Gujarat Ambuja Exports Limited's case, I think in APL Apollo's case as well, competitors were weak. They didn't got into a lot of SKUs. So Surya Roshni was there in black pipes only, usi ke andar tha. Whereas Gujarat Ambuja Exports Limited ke case mein MNCs like Rocket and there was also this listed company by the name of Anil, which went bankrupt. Now Gujarat Ambuja Exports Limited is doubling the capacity from 3,000 crushing per day to almost 6,000 maize crushing capacity per day. And over there as well, now we keep talking about ethanol. So over there as well, there is this ethanol play that if right. So I think if you look at countries if you look at countries like Brazil or US, so like please be open to correcting me, but from what I've heard, that this Gujarat Ambuja Exports is doing a QIP of 1,000 crores plus. They have this plan, and they also want to get into ethanol production because they see it as natural extension for their businesses. So I think just to answer your previous question, yeah, some businesses do just through execution and weak competition end up creating moats around them.
Got it. Got it. Thank you. So I'm guessing this Gujarat Ambuja exports will be grain based and not cane based.
Yeah, it will be grain based. You're right.
Oh, got it. Got it. Thanks.
Right. Now, just coming to 3-4 more case studies. So I just love to teach through case studies because I think किताबी ज्ञान तो मतलब आप बुक उठा लो किसी से भी मिल जाता है, because at the end, if you look at Indian case studies, then they become very, very interesting. So just 3-4 more case studies, and then we can have a Q&A, or sort of we can conclude the presentation. So one of the case studies that I have is of Vinity Organics, right? And actually, if you look at DNA of the businesses, that is to be niche chemicals, especially if I talk about Vinity Organics. Like they started out basically started out as a manufacturer of isobutyl benzene, and how they replaced imports and became the world's largest. Secondly, they started manufacturing ATBS, which was again a niche market, and how over there they became the world's largest. But now they're getting into the manufacturing of butylated phenols and the derivatives of butylated phenols. But over here, I don't think that they can become the world's largest. So I personally think that the strategy of the company has went through a shift from being a company that targeted the entire world by being the lowest cost manufacturer to a company that is only targeting import substitution. And over here, now this is where reading helps you a lot. This is where reading about the capacities of butylated phenol in the world helps you a lot. That actually in the other two lines of businesses, if I talk about ATBS and IBB, their competitors were weak. They had higher cost structures. But in butylated phenols, it's not that their competitors are weak. Competitors have similar cost structures. They're just targeting the import substitution market. So I think the margins will structurally basically have a structural downward stick from here. So whenever such business strategy evolution happens, it reflects into numbers 2-3 years down the line. अभी तो शायद से oil production का uptick था, पीछे ATBS के revenues और ये सब दिख जाएंगे. But these things start reflecting 2-3 years down the line. Now compare this to a Deepak Nitrite, which has always had a mix of two strategies. And one of the major strategies has always been, DNA of the company is we'll target import substitutions. And they've gone through one aggressive expansion after the other. So again, whenever a business goes through a shift in business strategy, then you should sort of think about it. Why is it happening? Is it happening for the good, or it is happening for the worse? One of the things for Vinity Organics is कि already 80% market share है दो product segment में. So I think the strategy of replicating, getting into more and more niche chemicals itself becomes difficult because they're niche for a reason and technical know-how is difficult for a reason. This is why they haven't been able to get into more and more such products, even though they can after 3-4 years. But currently, it seems basically to me, it seems that way, that this is what is happening now. Similarly, let's compare this to APL Apollo. Now, APL Apollo, so like if we talk about Michael Porter, he keeps classifying things into three categories. That is, either you can be a differentiated player, or you can be the lowest cost producer, or you can have a very focused strategy. So earlier he thought that you can only do one, but then in his updated works, he mentioned that how some businesses are actually doing like two or three of them together. Right. So actually, three very good books I can recommend you to understand industry structures, business strategies, and country level strategies. One I would like to recommend is Competition Demystified by Professor Bruce Greenwald. Second is Understanding Michael Porter. So this is not the Michael Porter book. So this is a book written by an Italian. So by an Italian author, Understanding Michael Porter. And third one is How Asia Works, to get an idea that why some countries have won in spite of having lesser resources. That we discussed the example of Japan and China, like Japan versus Philippines as an example. Now, coming to the example of APL Apollo, so I think as Sakeji is also on the call, so he must have seen that earlier the business was the lowest cost manufacturer, right? So earlier strategy was of being lowest cost. So out of the three Michael Porter strategies, earlier they were into the strategy of low cost. But now they've entered into the strategy of differentiation. So now they're getting into value-added products. They're launching higher column pipes, thicker column pipes, where the EBITDA per ton is north of 20,000 rupees. I think Twitter is hanging, right? Just a second. Right, am I audible?
Yeah,
You're
Right. Quite buggy product as of now, right? So again, so this is happening in APL Apollo's strategy, and if they're able to sort of de-risk themselves, and if they're able to become a much more non-volatile business, तो ऐसे businesses में structural re-rating होती है, right? So if you really want those type of returns, whether it can go to that 60-70p, where a lot of people come in and start calling it consistent compounder, then you have to take a bet on that strategy, right?
Yeah. Ishmoit, you're on mute.
Right. Now, great. So I think phone hang over the bar. So yeah, so one of the last one or two case studies that we can discuss is that of Saregama, and then we can have a case study on DVs versus Loris. So like comparing DVs to Loris, again, if you look at Loris Labs business, so incrementally the 1700 crore capex, out of that, I think 60%, that is out of 1700 crores, if you like cut through the capex numbers, 800 to 1000 crore of capex is planned for the formulations business, right? Now, just like TSMC, so Taiwan Semiconductor, like semiconductor manufacturing, what they did, that they didn't go into designing of the chips, they just stuck to manufacturing of the chips because they didn't want to compete with their end client. Similarly, in Loris business, if we compare this to DVs, so DVs has never ventured into manufacturing formulations. Now, just imagine you're sitting in an industry which is going through a boom. I'm taking you way back to 2008 to 2015. All your peers are printing money heads over heels. Sun Pharma is getting a market cap of 2-3 lakh crores. Lupin is getting a market cap of 1-2 lakh crores because they're manufacturing formulations. But that tells you about the focus of Mr. Murli Devi, that he didn't go into formulations because he didn't want to kick his customers in the ass, right? Because that is the conscious strategy, the basic conscious business. It was a very conscious business decision that they didn't go into formulations. How much work will it take to do for forward integration, right? So again, Loris over here, this is why they've created a subsidiary, because beyond a scale, when you enter US market in a very aggressive way, your customers will end up asking you that why are you competing with us? So demerger is a certainty over here. It is not a question of if, but it is just a question of when, because because the type of business they are in, custom synthesis and formulation, both of them just don't gel together within a single organization. So you can already sort of imagine कि 2-3 years down the line कि इस business में क्या होने वाला है, just by looking at the strategy today. And this is why synthesis business is put in a separate subsidiary. Last example that I have for you is one or two more examples. So again, like you must have seen an IT business by the name of Coforge. Now, Coforge again strategy is to like monetize the intellectual property or the IP portfolio, and they've been doing it extremely well, right? So they follow a differentiated model as compared to a pure vanilla IT services play, and that also ends up reflecting in the multiple right now. So currently, there is a bit frothiness in the market. There is no doubt. But now, finally, coming to the example of Saregama, right? Now, this is where you can apply those Porter's five forces, and if you read the QIP document and stuff, then things end up becoming more and more clear to you. That so just applying this competitive rivalry, availability of substitute, barriers to entry, bargaining power of buyer, bargaining power of suppliers. Now, from my industry checks or my industry scuttlebutt, so what I get to know is that T series is getting into a lot of movie launches directly, right? Now, this is creating an inherently a principal agent conflicts because I'm competing with my own suppliers of music, that is the film producers. And second trend that is going on is that Bollywood is getting professionalized. Now, T series is run by a family and it is known to be run like a fiefdom. And Saregama is run by professionals. So again, I can be totally wrong. I can be totally biased. Do not so if you don't want to sort of take this viewpoint, that is totally fine. These are just my industry checks which tell me कि हो क्या रहा है यहाँ पे. And because Bollywood is getting additionally professionalized, you'll also see that Saregama has been winning more and more basically movies from film producers. Like अभी जो करण जौहर का मूवी का था वो भी इनको मिला, जो संजय लीला भंसाली का मूवी था वो भी इनको मिला, एंड रणवीर सिंह का भी एक भी मूवी आ रहा है उसका भी इनको जो भी म्यूजिक राइट्स है वो मिला. And then you start thinking कि there is something happening, right? And second criteria that comes into play is that why are they talking about that we'll acquire regional music labels, right? Because essentially the thing is that regional music labels, so one of our graphic designers, so we have two graphic designers, and both of the so I like to I really love their work, right? So one of them used to work at a music label before. ही टोल्ड मी कि पैसा ही नहीं है रीजनल लेवल पास, क्या बार्गेनिंग करेंगे स्ट्रीमिंग एप्स के साथ. So this is a first hand review that I got. Now then from there I understood कि why are they planning to acquire, क्योंकि if a regional label is getting 4-5 पैसा per stream versus a Saregama, that's a hypothetical example, a 10 पैसा per stream, so I can just acquire the regional label and I can just jack up the earnings by taking it to the company level, right? So this is again a conscious strategy that you can recognize early in the journey. One more example over here is, so a lot of you must have tracked Honeywell automation. So I never understood कि ये business ऊपर क्यों जा रहा है. I never understood कि why this stock has been almost a 10-20 bagger, right? Then I realized, then I checked, then I did a segmental analysis. So whenever you get confused that sales नहीं बढ़ रही, something or the other is going on within the segments. That one segment which has higher ROC is probably shooting up, or one segment which has much higher margins is basically going up as a percentage of mix. Similarly, this was happening in Honeywell automation, that the export business was growing at a very fast pace, right? Now, similar to Honeywell automation, now I've seen what the MNC did, that they used India as a low cost manufacturing export base. Similar thing is going to happen in RHI Magnesita. Now, RHI Magnesita is into refractory production, and over there as well, what is going to happen? The strategy is extremely clear to me. कि next 2-3 years में क्या करने वाले. पहली चीज तो ये लोग ये करेंगे, because RHI Magnesita is world's largest MNC of refractories and world's largest player. पहली चीज they'll substitute the imports of magnesia bricks या ये सब जो भी इंडिया में हो रहा था. Second thing that RHI Magnesita is going to do is they're already expanding their capacities, and they'll be acquiring the smaller refractory players. And final thing, or the final jigsaw of the strategy is, which a lot of people don't know about, actually they'll be using India as as an export base to exporting to countries like Africa and other countries, because recently their India business head was made the business head of Africa. And what else is going on? Basically, they have this unlisted subsidiary which has 500-600 crores of revenue. Even that is going to get consolidated. So 450 crores of capex.
I think we lost him. Can you hear him, Sahir?
Nope, nope. Just gonna pull him up again.
Cool. Yes, you are.
Capex using India as an export base, already a business doing 20-25% ROCE. Steel production is expanding in the country by almost 37-38% in next 2 years. And unlisted subsidiary is being merged. All the unlisted subsidiaries have been merged with Orient Factories. Now, indication is very clear ki what they plan to do like with the Indian business. Like a smart, discerning investor will sit up and take notice. We will sort of recognize these things. So I think with that, Krishna and Sahir, I am so done for this. Was our third webinar of the day, and I like sort of wrote this almost a week or two ago. The examples I wanted to discuss, and more or less like all the case studies that I had. So काफी सारी तो YouTube पे भी हैं अभी भी. So I try to keep learning through more and more case studies, and I will highly recommend all of you to read how Asia works. Right. So any questions, Krishna, you can sort of ask.
Thanks, Ishmoit. Just want to say thank you so much. Great presentation, man. I have a couple of questions. The first one, can you please give us some antithesis pointers on Saregama? And the second one, with respect to RHI, I think I've asked you this before, but why wouldn't they? There was a merger with the other subsidiaries. Why didn't they just merge this subsidiary as well? And why did they leave this subsidiary by itself?
I think answer to the second question is that this subsidiary itself was acquiring some company from what I know, right? And
Oh, got it.
right.
It.
And
Makes
coming
sense.
to the first question, Saregama's antithesis, I think Swarnashees has written a good thread on that, but I will still say कि one of the antithesis pointers is so there is no way to get an idea that whether they're acquiring the right content or not, right? How would I know कि आज जो गाना acquire कर रहे हो 10 साल बाद भी famous होएगा या नहीं होएगा, right? So over here, the very interesting mental model that works is the Lindy effect. Lindy effect is the things that have survived in the same manner for over a period of time. They will keep surviving over a period of time, right? So Saregama's business. So if you look at the people say कि जो older library है वो ऐसी है वो वैसी है. I think that is Lindy effect in play, right? So key antithesis is we do not exactly know whether they'll be able to get the music acquisition part right because 200 crores का पहले capital deployment इन्होंने बोला था कि 200 crore का करेंगे and now they've raised money through QIP almost 650 to 700 crores which might go into acquisition and which might go into acquiring further music. So if the acquisition goes wrong, then that is obviously a big antithesis pointer. But I think the regional labels they might end up buying at 10 to 12 times EBIT. And that might actually be a steal because they can just jack up the pricing, like the pricing negotiations. So it's a very evolving movie. And like I think if they're able to get it right, so this could be very, very interesting.
Got it.
And
Thank
one
you
more
so much.
antithesis, just to complete the point is that for any reason or so he starts to like restarts the aggressive spends on karma. So this time in investor day meeting he like clearly mentioned that we'll not shy away from taking any tough decisions. So that was that we won't shy away from shutting the division. But I think what karma does is that also serves a larger purpose which you can only find it through scuttlebutt is that it helps to create these relationships with a lot of singers as well. So now a lot of people know Saregama by the name because a lot of those singers, film producers have that karma product with them. So that is also one of the motives to have it. But if they start the advertising spends and if they start if they go all guns blazing into karma, so I think that's a very big antithesis pointer. And actually, in all my earnings estimate or in all my upside estimates, I haven't even factored in कि वो जो films है, जो ये सब है, उनसे कुछ revenue आएगा भी. Even though that can also be a very good optionality.
Yep. Makes sense. Thank you, Krishna. You want to go? Do you have any questions?
No, man. No questions from my side. I think we can start taking questions from the audience.
Okay, guys, we're going to start an audience Q&A. Please message Krishna or I your questions so that we don't have any trolls up here. Just DM us what your questions are and we'll pull you up. Krishna, do you have any
No, I was
questions that
wondering
I've
in
sent
case
already.
Karan has anything he wants to ask or say.
KBC? I guess not.
We've got Sahil. So I sort of just pulled him up. Uh, Sahil, you want to ask something? Good to see you here.
Hey, hi Krishna. Hi Sahir. Just one thing, Ishmohit. Like you said, right? Saregama did 700 crore QIP. They've also said that they will consider giving dividend in the latest quarterly present like when they decide about the results. So would you think that this is a sort of a weird capital allocation if they give a dividend, because it's like first they raise money from investors, now they're giving it back but in a tax inefficient way?
Definitely, it's a weird capital allocation. But see, with these dividends, over the years, I've seen so many businesses like which have a lot of debt. Even they keep declaring dividends. So I think it's sort of ingrained in the corporate fabric of the corporate India to announce basically dividends. So let me give you an example of L&T and Tata Motors. So both these companies had very weak balance sheets some time back. Tata Motors ka, so they still kept announcing dividends. Similar case with L&T. So that thing, I don't understand what's the fascination of corporates to announce dividends. And actually, if you had attended Doris Labs last annual AGM, right? If you had attended the AGM, so one of the shareholders, he started thrashing Dr. Chava ki why, how dare could he announce lesser dividend and stuff. कि इतना डिविडेंड तो देना चाहिए था ये सब तो then I have very conflicting opinions, but in rational sense it doesn't make sense.
Thank you.
Yeah, we can go to Sanjay and then Chetan and then Fatehpur.
Yeah, hi. Good evening, Ish. Mohit, thanks so much. Very interesting space, Krishna and Sahir. My question was actually, I DM'd, was a follow on from, the Saregama antithesis is that, when compared to tips and you look at Saregama valuations, uh, with regard to the growing library and production house of tips, which is quite, recent and still growing, vis-a-vis Saregama. How do you place them, given that they're more focused towards Hindi and Saregama is now looking to regional and other stuff like that?
I think, Sanjay, to answer your question, see, both the companies will, so industry has massive tailwinds, but I just think from whatever the scuttlebutt or little work I've done on the industry, so I think tips needs to professionalize. Right, still tips is still not professionally done. So from my research, so they'll be going for the entire professionalization and stuff. But to get those really big film producers to hand over your music to tips, I just don't see that happening as of now, right? And that is not necessarily a bad thing. But since I generally structure my portfolio in a more concentrated way, so for me, Saregama is perhaps the largest position as of now, and I had the choice of allocating between the two, but I ended up choosing Saregama because I could see it is already professional. It already has those film producer relationships in place, and Tips also has this little bit of concentration risk. So one of the singers, I'm forgetting his name right now. I think I've spoken for 6-7 hours today. So one of the singers has a very high share of the music library Tips.
Okay, thank you. Thanks, Cheers.
Can I go, Krishna?
Chetan, right? Yeah, go, bro.
Yeah. So first of all, thank you, Krishna. Can't thank you enough. And great session going, Ishmohit. Ishmohit, where is he? I think we lost it, right? Do we have
Pardon?
him?
Yeah, Chetan. What did you ask?
Ishmohit,
No, I think he
I
got
can't
bumped
see
off.
him.
No, I think Ishmohit got knocked off. Hold on, we'll bring him back.
Okay.
One tips question was enough to knock him out.
No, man, this is just Twitter Spaces and it's shit. Honestly,
I know that.
Yeah, Clubhouse is
Sahil,
much
I think
better.
has the course record. of being knocked out 26 times.
But Krishna, it is much more laggy, na, in comparison to Clubhouse.
The audience here is larger than it is on Clubhouse
Oh,
right now.
okay, okay.
That's the only plus point of Spaces, because it gives you access to a following that was built over 10 years. Essentially, the platform has been active for 10 years. So you've got a lot more people on the platform than you do on Clubhouse.
Yeah, I think there were more than 1,000 people a little while back.
Yeah, I think we're still more than 1,000 people. No, we're at 960. I think because we lost Ishmael, some people bounce. We're getting him back, guys. Don't worry.
Maybe you should ask him to log in with both his IDs, with the SOIC and his own ID, so
And
that
then
if
switch
one
between the
fails,
two.
switch between the two. Yeah.
Yeah. Maybe we can suggest that when he comes back.
I think he's back.
Yeah, let me just pull him up.
You also, Krishna, I don't think we can have more than 10 speakers, right?
No, we can't have more than 10 speakers. We'll move people back once they've asked their questions.
Got it. Yep.
Yes, you are. Yeah.
Great.
Chetan, go
I
ahead
think
and ask your
Chetan was
question.
next. Yeah.
Yeah, yeah. So Ishmat, in one of your tweets, you have mentioned that the DMCC annual report you really liked. Can you share some of the insights, please?
Yeah, I think just because of the disclosures and the way they sort of describe the industry, the trends that are going on, and if you also read the latest con calls, he actually uh, sort of said that this China plus one trend, even though it's real, but if China wants to reverse it, they can reverse it easily because of the capacities they have over there. And secondly, one of the things that I really liked in the annual report was their strategy is very clear that we only want to enter products which have more than 25% EBITDA margin. This is what is written in the last one as well, and even in this one as well. So companies which have a market cap of below 500-600 crores, I think DMCC would be somewhere close to 350-400 right now. It's hard to find such detailed annual reports, in my view.
Okay, thanks.
Fatehpur and then Sandy.
Yeah. So, Mohit, my question is related to like Saregama's Karwa's like department. Like when I was reading like people's what is the negative point for Karwa. So they were saying ki whatever they bought, they are like 60-year-old people, and they don't type and all these things. Like main thing is like audio based searching is not there. So do you think if they will provide audio based sound play, then it will be a very big positive for their business?
See, Fatehpur, thank you for the question, and like thank you also for your tweets, which are very appreciative. So I think the problem with that is ki, it's a product business, right?
Mhm.
So and Saregama barely breaks even over there. So that is one thing to be cognizant of. And a problem kya hoti ki typically if you look at the licensing business जहाँ पे if you just assume कि they stop acquiring content, right? कि आज वो content acquire नहीं करते, तो easily that business will have EBIT margins of 45-50% easily. Like I'm being on the conservative end of things, क्योंकि वो content charge और ये सब नहीं होता. Now assume that 45 to 50% margin business is generating cash flows, and those are being reinvested in a business that is like barely breaking even, or that is a low margin business. मैंने प्रोडक्ट बिजनेस में 15-20% के ऊपर ग्रॉस मार्जिन तो होता ही नहीं है, मतलब जनरली एज एन आइडिया. सो दैट इज व्हाट मार्केट्स won't like. मतलब stock will get thrashed. This happened in 2019-20. I actually read about the business originally way back in 2018. So then I thought कि कारों में क्यों इन्वेस्ट करें, मतलब दूसरा बिजनेस.
Oh no, let's bring him back.
Twitter will definitely teach us how to be patient.
Yeah, I think that point is like that Karan made is really been driven home right now.
Also like not all big people are that efficient like that also.
Yeah, absolutely.
Actually, you got to tell him like if he is using both Wi-Fi and cell phone network. So if it keeps switching between the two, there are issues because of that.
Krishna, can you see his request? Because he's messaged saying request, sent, but I can't see any.
He's there. He's there. You'll have to add.
Yes,
Yep.
yes. Welcome back.
Right, this has been the 10th time you're welcoming me back. So it's surprising. Right. So where was I? Right. So if they invest in the lower margin business, then markets will be skeptical. But again, the MD came up in the con call. Then he sort of clearly declared the capital allocation plan. कि जो भी 200 crores का अभी incremental cash flow है, that will be going in the music licensing business. Stock hasn't stopped ripping since then because incrementally, like as Sahil said in today's thing, that return on incremental invested capital, which we also keep saying. So that direction became almost all of a sudden clear that they are not willing to invest that much of capital behind Karma business as of now. So that thing ends up becoming clear. But that's an antithesis point. If he announces ki 150, 60 crores type ka, like 50, 60 crores type ka, like advertising spend in the Karma business, then you be skeptical, like be fully skeptical.
Okay. Another question related to Deepak Nitrite. I was reading to some people were talking ki why Deepak Nitrite got that much margin in like they were saying ki mainly like a supply disruption was the main reason why they got that margin. They because of that they were able there was no import like other people were able to import into the India, so that is the reason they were able to charge high margin. But as a supply chain is like cooling out, they are saying that they will lose their proper like margin what they were charging to others.
I think steady state basis mein you can never assume a business like Deepak to do 27, 29% EBIT margin. So that bit is clear. So that is a already known evil. That phenol is a known evil. But what you have to also do is that those people won't do, which I'm pretty sure of. So first thing is I read the article that you're talking about. Now that article goes back 2 decades into something that happened in annual report that was way back of 2004, and then you paint the business from there. Then you bring that point up from 2004 or 8, and then you write an article. I think that is flawed in my opinion. That is not business analysis in my view. That is like fulfillment of a fascination of going back way back like 2 decades ago. I can also find dirt on almost every business that we are invested in currently today. So that thing is for sure. And one thing is businesses evolve. So Deepak Nitrite is not a story of they will keep doing phenol. It's a story of getting into downstream phenol derivatives. Phenol is a necessary evil. See, chemical companies, if you read across the sectors, then you first need to have the feedstock. And Deepak Nitrite ka DNA is to be an import substitute player. So first you substitute the imports, then you start getting into downstream derivatives. So that is what the real strategy is. I will actually rather suggest you to watch something from someone who is actually a practitioner and who actually understands the chemical industry really well. That is so I think TIA Association has a YouTube channel over there. Ameya also has a very fantastic session on SaaS businesses, and also there is one session on chemical industry, which is on Deepak Nitrite and clean science. And that guy is a practitioner. Matlab, he's been investing in the space. He understands the chemicals well. That will actually be a that will give you better understanding ki, why what is happening and why and so. I like to call it a diversified chemical business because sometimes some segment gets bagged and the other segment picks up. But going 2 decades back into something that happened way back in that annual report is, I don't think that's a good way to spend your time as an investor. Like just this is just my opinion.
Yeah, okay. And last one, like related to if you see like Saregama signed that one Bengali singer. So do you think they are going to tips away, like hiring some special talent so that they can exclusive some?
And see, Brito, I sort of uh, like don't want to get so much into details कि वो कैसे करेंगे कैसे नहीं करेंगे, but we have to sort of trust them कि whatever they acquire. So they say that the payback is lesser than 5 years. Tips वाले बोलते हैं 2 ढाई साल से कम है. From what I understand, payback is somewhere close to 3 to 4 years. If they're able to get famous singers, that is good. But I think उसमें जाना ही क्यों है? It's like sending optionalities. अगर 2 3 ऑप्शनलिटीज भी चल गई तो मोर और लेस you're done. But the real play in Saregama will be in regional music or the acquisition. So we just have to wait for whatever they end up doing. So let's see what they do.
I think Sahil had a question. Sahil, go ahead.
Hi, Ishmael. Just one more question. What I've been thinking about is, of course, you have extremely good knowledge about the specialty chemical industry, and we can clearly see earnings coming for a lot of these companies, right? They have very high quality of earnings, but they're also very, very richly valued, some of them. And what I'm trying to understand from you is, do you care about your incremental capital deployment? When doing that, do you care about the current valuations? And like, how do you factor that in? So things like Neogen and things like Naveen have very high valuations. And basically, my worry with something like that, and as an example, like I am invested in Saregama, but I would be very skeptical to deploy more money into it right now. Reason being, I have no idea how US Fed rates will move. Will that move the multiples of my companies lower? So I'm just wondering, like, do you care about any of that, or are you like, yeah, I'll deploy money because the visibility of earnings is there? And if the multiples move lower, they will move lower, and like we can't help it.
I think so I'll have a little broader answer to that. So I think uh, from at least my experience or from whatever I've learned in the markets as of now, so there is actually, so you might not agree because right, so everyone has a different philosophy of investing. So like Neogen chemicals obviously it's like obscenely valued right now. It's not even a question, right? But I think the thing is that there are some businesses where you have to be valuation conscious, and then there are some businesses where you can be a little more lenient with valuations, in my opinion, right? So for every bad example, we also have a good example, right? So if I look at Ashel Polytechnic, right? 2016, that business was trading at a PE multiple of 62 times. And right, and secondly, that so at that time Nifty was at 17 18 times PE multiple. So you could have थॉट कि कितना ज्यादा बेसिकली वो जो बिजनेस है उसका मतलब लोग सोचते थे ओवर वैल्यूएशन है. एंड उस टाइम पे इंटरेस्ट रेट्स भी इतने कम नहीं थे जितना आज कम है. लाइक वी से कि if Fed is doing something or the other happens, valuations do matter, but wherever earnings are sort of explosive. So Ashel has been a 10 bagger since then in 5 years time frame, because earnings kept growing and actually got even further related from 62 times to 100 times. So where do I draw the line? I think for me, the line draws wherever I think variance of outcome sort of increases. So for me, let me like put it this way. Suppose like a Saregama, like last buying we did till when in our estimates it was at 10 times EBIT of 3-4 years out, right? We
Can you hear him?
Nope. Guys, also just announcing that as and when we get done with each person asking questions, we will be moving you back to the audience, and then if you have more questions, you can always raise your hand and we'll pull you back up. This will sort of prevent the space from crashing. It's just for logistical purposes. Also, in the meantime, I've put out a thread on the highlights so far,
as well.
so that you guys can check that out as well. It's pinned here.
Right. Am I audible?
Yeah,
Yep.
Ishmood, you're back.
Great. Right. So again, I think I do get skeptical while deploying incremental capital. But in my sense of framework, so I generally have this. So I like to call it the way we've basically divided valuation into four buckets. So one is that you are certain, but the market is also certain. But you think that the growth runway is there for next 5 to 7 years at least, and that can be seen in businesses like Naveen because they have 7 year confirmed contract, and apart from that, a lot of those molecules are getting into dedicated capacities, right? So I think that type of business is somewhere which is right at the point of what PI Industries was in 2012, 2013, with an added benefit that it is there in agro as well, and that is there in pharma as well. So just a full disclosure, I actually bought the business again when there was this correction in chemical companies at like almost at a PE multiple of 60-61 times. I ended up paying up for it because I see the earnings growing at 40-45% for next 2 years. So effectively, my peg ratio, or any way you put it, that wasn't really high in that scenario. Saregama, currently I'm skeptical. I'm fully skeptical. Neogen, beyond a P of 100 times, it becomes a little dicey. So when I bought it, it was at a 55 times P. I was sort of very skeptical of buying too, but then I made peace with my mind because I thought कि यहाँ पे 30-35% का earnings figure तो दिख ही रहे next 4-5 years का. Like that was the initial thesis of buying. Did I ever imagine it will go beyond 100p? I never imagined, right? So perception is really strong. So if in this case, as you rightly mentioned, so it's a beautiful interplay between perception and earnings. So whenever perception is really strong, then your earnings have to be strong. It cannot be that your earnings are not strong. If your earnings are not strong, then you get the perception derating happening too. But if your earnings are so, the type of investing you do and the type of investing I do in half of my portfolio as well, is when the earnings are going to be stronger, earnings are actually improving, but perception is not strong. This is where you typically get the variant perception opportunities. So for me, like Pix Transmission or an Equitas Holding or a Healthcare Global, which is perhaps the cheapest hospital, right? So these type of stocks, or IFL Finance, which we also own, these type of stocks will fall into that bucket. And then there is this bucket where I think earnings are likely to be equally strong, and where the perception is also strong. But I have generally seen that the perception doesn't go through a horrible derating, because I think one of the reasons is float key we talked about, and second is unless or until the earnings start giving negative surprises, and that is an issue. Now just look at this, people sort of again over here you can also make mistakes. So you can make mistakes in both the buckets. So if you are getting into companies where earnings you think will be strong but perception isn't strong, valuations are in your favor, you still end up investing in a Strides Pharma, right? Where even though like valuation was in your favor, still it's a 60% down from there, right? Because earnings weren't in your favor. But even in the first bucket where earnings and perception both are in your favor, but if earnings collapse, like what happened in the case of Sequent Scientific, right, then the perception also takes it. So at the end, what is common between the both? That your call on the earnings has to be right. right? If your call on the earnings is right, then I think it makes sense to be with the known devil, but not beyond a point of time, as you rightly mentioned it.
Yeah, thank you so much.
Cool.
Yeah. Next.
Let's.
Sorry, go ahead, Krishna. Sorry. Go ahead.
Do you have a question, Sahir?
No, 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 no.
Ah.
I was just saying if I think AI was next in line. So
Yeah, it's AI and then Favelo and then.
Actually, I was in line, I guess.
Oh yeah, Sandy was Sandy. It was Sandy and then accidental and then Favelo.
Yeah, yeah, sure. Hello.
Yeah, yeah. Go ahead. You're audible.
Yeah, yeah. First of all, great guys. You have done a great job with this space. Lots of learning to take. And right now, I'm very new to investing here, so I have a very basic elementary question. uh, how you have presented so many cases on this space, so I just want to know how you go on with your research, what resources you use, any particular religious steps that you follow religiously, and that's it. I mean, I just want to learn the art of research which you do.
I think so. Like on our YouTube channel, so there's this video on how to do industry research. So that is like, I think that is the basic beginning point which I suggest everyone, because that is like almost a 2 hour video, and that is on how do you identify different metrics of an industry, how to get to players and different industry bodies conscious. So I think that is a very good जो भी resource है that you can use. And so I think that is the starting point, because I've discussed almost all the जितने भी resources and to do industry research and to like narrow down on players in that one video. So you can sort of use that.
Yeah, just for
Okay.
everyone's convenience, I'll add it to the thread that's pinned on top, so you can just access the video there.
And actually, one of the problems I faced, so I was listening to Sahil today, and I sort of like we did a webinar with him, and really appreciated his energy and vigor for research. Because to be told, for first 12 to 18 months, I was like, when I got really interested into this, I was just wandering around like an idiot, because खुद को लगता था कि मतलब एक्चुअली कन्विक्शन आता भी था, नहीं भी आता था, रिसर्च करने के तरीके ही नहीं मिलते थे. Then I thought कि why not simplify stuff. So that video on how to do industry research, actually I thought of that before making, कि अपने आप को अगर सिखाना होगा 5 years या 6 years ago, तो कितों में वो जो वीडियो उसको कैसे बना था. So that is the mind frame with which we created that one particular video. And I've put out almost all the resources. You can check that video out. I think that comes highly recommended from my side.
Yeah,
Surely, I'll surely watch. Thank you.
accidental and then Favelo. I think accidental got bumped down. 1 second, let me just pull him up.
I mean, I'm even afraid to mute my sort of video feed, because the last time I muted, I got locked out. As
That's crazy.
First one is the follow-up for Sahil's question. Like I was listening to Uttapal Sethi sir, he was saying reversion to mean is a phenomena which doesn't apply to many companies which continuously, are trading at premium valuations. So I want to know your opinion on that. And additionally, any case study where share buybacks has gone wrong in Indian context?
I think I'll take the second question first. So I'll tell you how buybacks have been used for corporate fraud, right? So like in 2019, like 2018, when there was this full blown bull market in mid caps and small caps, 2017-18. Now Vakrangi, so I don't want to name the anchor or someone. So if you just search on YouTube, you just look for Vakrangi interviews and Vakrangi stock analysis, you'll find a few of the anchors who are like highly celebrated on Twitter as well. They're doing analysis of Vakrangi and stuff and pitching it as the next big thing. Some of them even called that Vakrangi is the next Infosys stuff. Just look at the annual report. Just doesn't make.
Did we lose him?
Yeah.
Yes. Yes.
Oh. He didn't even press mute and he still like got knocked out. Hold on.
In the meanwhile, guys, just a quick disclaimer: none of the stocks discussed here are investment advice. Please do your own research before investing and consult a financial advisor. All the stocks we mention are just used as examples and are just for educational purposes. Just wanted to give a quick disclaimer.
Yeah, Ishmohit, are you able to speak? Sai, does it show connecting for you also?
Yeah, but it doesn't show him anymore.
Okay, hold on.
In the meanwhile, guys, if you haven't checked out Ishmohit's YouTube channel yet, please do. His YouTube channel is SOIC, School of Intrinsic Compounding, and please check out soic.in. They've got a great course, which I am personally a member of, and
Yes, so am I.
yeah, it's absolutely brilliant. So you must check it out. Ishmohit, yeah,
Am I audible?
you're audible.
Right, I just got
Yeah,
connected back. Am I audible, right? Great.
yeah,
I think I was answering the Vakrangi question. So I think Vakrangi, it was quite clear. So in these businesses, just need to check the amount of computers they have per employees, right? And there was such a big variance over there that per employee they had computers worth 40 lakh rupees. I was like, what are they doing, right? And then all of a sudden they wrote off the entire thing, right? 900 crores of or 800 crores of computer gone from the balance sheet. I just couldn't make sense of the thing. I think I just sort of forgot the question, whatever the point I was making. Sorry, you can repeat the question.
Yeah, basically, I was asking about any case study where buyback has gone wrong in the
Right,
Indian
right,
context.
right. So yeah, this company came up and because stock started tanking from 600 or 500, it tanked to almost 70-80 rupees. Then from there, then at 70 rupees, they came up and they announced a share buyback just to prove that they had real cash, right? And then stock went from again 70 to 200 to 210 rupees, and like the buyback was supposed to be held on the next day, and just on the previous day they cancelled the meet, and then the stock just went one way to 30 rupees or 20 rupees. So in especially in such shady companies or in companies like, so I don't want to name the jeweler, like that those companies are over there, I just find it hard to sort of get into such businesses. So this is one case where actually share buyback wasn't announced, but the shenanigan of buyback was announced. Generally, Indian context, mein only like companies which are cash rich, have a lot of cash, they end up doing buybacks. There could be some examples over here as well. Like there could be some examples where industry growth has stopped. Management doesn't have anything else, so they might be just buying back the stock. So one of the companies where I thought it was very interesting to see the capital allocation. So Goldium International. So there are some of the amber or red flags over there as well, but that company has been rewarding the shareholders with one buyback after the other for last 4 or 5 years. So I thought that is an interesting exercise to do. First question,
Thanks.
if there were two questions, no?
First question. Yeah, first question was Ishmoit. Basically, reversion to mean doesn't apply to the high growth companies. So that was
See, I think theory of reflexivity ends up playing out over here. Like, like the valuations are already high, and there are like strong FIs and DIs holding the stock. There is no float, and as the business keeps performing, valuations tend to sustain. But again, this is for very few selective business. Just to be clear, this couldn't be the norm for every business, but I think for very few selective businesses, this could be there. So one good activity to do is to check the price to index ratios of a lot of businesses like Asian Paints. Compare the price to index ratio for last 2 decades and see whether it always traded at a premium to the index or not. That will give you a good idea. I think also this book by Terry Smith, like Investing for Growth, if I'm not mistaken, that's a good read if you want to understand that investing philosophy. See, my job as a teacher or our job as sort of explaining stuff. So we like to study different investing philosophies. We are not chained into anyone. And if that part of the world exists, so this is their thinking of buying a stock. I'm not saying that is particularly wrong or particularly right, but that is what you have to observe as a market participant. I don't like to call things right or wrong, because I think I can just have my own framework. Whether should I take that in my own framework or not, that is a different matter. But I understand what their framework is, where they are coming from, basically.
Yeah, makes sense. Thank you.
Thank you.
Hello to all. Basically, I have two or three questions to ask. First,
Dipesh, hold on. We've got Favilo first, and then we'll come to you next.
Thanks,
sorry.
Krishna, for giving the opportunity.
Yeah,
Hi,
go ahead.
Mohit. It's always a pleasure listening to you. Great ideas, great research. Uh, I had a question. I don't know. I joined the space a little late. I don't know whether you covered this or not. What are your thoughts on the PLI scheme playing out and the profit pools it's going to create, especially in sectors, processed food and electronics? Any
I
thoughts?
think,
Any?
see, broadly, Fabulous, it's a very good question. So, actually, I forgot to cover this. So, this was a part of the thing. So, see, PLI is one thing, and then enforcing export discipline is the other to avail the PLI benefits. So, what I liked about the policy was the latter part more than the former. We are enforcing export discipline.
I guess we lost it.
Yeah, we'll bring him back.
Yeah, sure, sure.
If there's anyone from Twitter Spaces here, get your house in order, man. Like this is some BS.
Uh, but it's crazy that despite all the glitches, we at any given point have no less than 20-25 requests of people patiently waiting to ask their questions.
Thank you guys for being such a wonderful audience, man, and sticking around. Honestly, um, and yeah,
Welcome.
Right.
Ishmael, just a suggestion if you're using
Me,
Wi-Fi and
I'm not
there are
using
a lot
Wi
of
Fi at all.
roads.
I'm just sitting in my basement where I read,
Okay,
and there's
okay,
a separate
okay,
Wi-Fi.
okay, 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 okay.
So,
The PLI
yeah,
scheme.
PLI scheme. I think I like the second part more, where to get those incentives, there are some certain milestones for it. That enforces export discipline, because if you look at these countries, Philippines, Malaysia, Indonesia, so especially Malaysia. So if you read this book, How Asia Works, they never enforced export discipline. They gave incentives, but they never like enforced export discipline. कि आपको इतना तो करना ही पड़ेगा, इतना ये incentive like avail करने के लिए. So I think broadly for country as a policy, this is going to be extremely good. But what will end up happening is that, especially in sectors like textiles, a lot of small guys are going to get killed or trampled over. And the large guys will sort of gain in stature and market share, but because they'll get all the incentives, and they'll if they fulfill the obligations, but the small guys are going to get trampled over. So that's the like that's the risk reward trade off that the government has done. Even in auto ancillary, if you look at the size of those PLI schemes, the amount of investments that you have to make to basically qualify for the PLI, then you'll also get an idea that tier 2, tier 3, tier 4 might have some issues, especially as compared like in textile sector. Coming to electronic manufacturing, so again, already, so it's a seen trend, right? It also reflects in the multiple growth will be strong, but actually for me, because my father belongs to the industry, I've seen contract manufacturing firsthand. So call me biased. This is why I could never invest in Dixon, right? Even though I should have invested, like as a hindsight analysis, but I couldn't invest in Dixon because I've seen how the business is, like how low margin stuff the business is. But that's just the nature of the business. But yeah, as a country, we'll do extremely well. whether it's electronic manufacturing or whether it's some other sector. And a lot of companies will basically benefit from PLI scheme. So छोटे companies में, like if you look at the incentives being doled out, so I think natural capsules, I think 50-60 crores का तो PLI incentive भी मिल रहा है if they like do all the targets they have or achieve all the milestones they have set out for. 90 crore के capex में 50-60 crore government से ही वापस मिल रहे हैं, like to enable more and more manufacturing. Like I just recently read this business pitty engineering, so वहाँ पे भी almost, if I'm not mistaken, 400 crore ka incentive is spread out over 10 to 12 years. This is actually, as a country, what we should be doing, giving more and more incentives to manufacturing, encouraging more such stuff. And next 3-4 years, I think industry wise, a lot of these companies will do extremely well. So you have to pick your spots accordingly.
Yes, right. I guess that answered it. Auto ancillary, you spoke it. The profit pool in Nifty 500 auto ancillary has 7,000, and the incentives, PLI incentives, are around 10,000 crores. So I feel that it's a huge opportunity.
I think it's huge.
Thank
You
you.
rightly mentioned, because it's the first time we are intentionally incentivizing a creation of manufacturing hubs or creation of manufacturing champions out of the country. So it's a smart move in my opinion. How it plays out, we'll see.
Yeah, even Philatex in their investor presentation, they have mentioned that this the entire textile hub and how it's going to benefit. Anyway, I won't. I mean, it's your space. I won't. Thanks for the answer. It's amazing. Thank you.
Great.
Cool. We can go to Dipesh now.
Hello to all. My question is related to auto ancillary sector, and as you know that if we see from the past 1 or 2 years, every stock is making their all-time high. Still in this bull market, how we can find a good stock which we can hold for a decade or more than a decade, apart from blue chip?
Dipesh, I hope you're doing well. So my answer might be a little disappointing. So see, I just my framework. So I'll explain you the other framework as well. So I think the way the world is changing and stuff. So more than मतलब next 3 to 4 years or 5 years से ज़्यादा taking a directional call for a decade or two becomes a little difficult, right? But the other framework says that those who are taking decadal or 2 decadal calls, they are generally averse to change, right? The types of industries they are taking those calls in, over there change isn't accelerating, over there change is really slow. Like someone buying Asian paints for 2 decades. Now I understand that his time frame is 2 decades. Paints business में क्या change हो जाएगा, right? मतलब like we have seen that narrative of like being a logistics business, which I think actually makes sense too. So just not narrative. But again, paints business में 2 decades में बहुत ज़्यादा change नहीं आने वाला, right? So if you're actually trying to take those long calls, so you have to be actually adverse to change कि इसमें change नहीं चाहिए हमें. Because अगर हम ऐसी इंडस्ट्री में चले जाएंगे, especially auto hands जैसी में, where there is going to be a lot of change, so taking a decadal call over there could be like difficult in my opinion. The way the way I understand the space, at least. I could be 100% wrong. So like, don't hold me against it. I can be 100% wrong. So I would actually rather take a 3-4 year types of call over there, which business is going to do directionally well. And my understanding of the names as of now, so I just understand that like the tier 1 names. Abhi tier 2, tier 3 तक मेरा competence नहीं है auto hanks में. So that is like an error of omission on my own end.
So how basically in auto ancillaries, even I'm not looking for much time, but apart from auto ancillaries, as you said, that paint, or you can say the chemical sector or the IT sector, so can we look these sector as a more than a 5 year time frame?
And likely most of the companies are here to do well because India has had a competitive advantage in low cost exports for last 2-3 decades now. So I think had you bought any good IT company 10 years ago and had you held on to it, you would have made money because industry level advantage hai. Right? So spotting that particular company is your task. But India, in terms of comparative advantage, has like so in terms of comparative advantage as compared to other countries, pharma India has done well. Chemicals India is doing really well. textiles might pick back up again. IT in India, though, like last 25, 30 years, like just has been on a stellar run, right? So you have to pick your spots. Follow the industry experts. IT Cliff, follow this Twitter handle by the name of Ameya, right? For banking, follow different like follow Mr. Ramendra Hazari. I think he might make you sellers talk too, but again, for follow his handle to sort of get knowledge. So then you can pick your spots easily. Financials have done well for last 2 3 decades, right? But financials where you need to have some understanding key which one is not crooked basically.
Cool. Let's move on.
Krishna, can I ask a quick question here? It's a
Yeah,
bit
bro. Of course.
related to. So Ishmohit, yeah, you were talking about change and how auto ancillaries there'll be a lot of change. I saw this uh, quote by Bezos, which says, people often ask me what's going to change in the next 10 years. What they should ask me is what's not going to change in the next 10 years. So, what industries do you think aren't going to change in the next 10 years, or change relatively less?
Right. I think that puts me like that just need to think a lot more for that answer. Right. So I think see the way IT services are delivered might change, but will IT services as a business become even more relevant? The answer is absolutely yes. Will ER&D business as a business become more relevant? The answer is absolutely yes. Will the paints business, suppose if someone is betting on Asian Paints or someone is buying this Pidlite and stuff, right? Will this business all of a sudden change in a decade or two? I don't think so. People will still get painting done over their house unless or until we get some 3D structure already sort of made and already painted like in the machine. That is the only disruption that can happen. But I think these type of businesses generally they might be disruption proof. So Asian paints को क्या disrupt करेंगे? Like, can you think of a way the Asian paints gets disrupted? So I'm just thinking of a really long term horizon. I'm not saying कि हम 2 3 साल के point of view से सोच रहे हैं. But again, it's difficult to see how it gets disrupted. Now CDMOs, especially CDMOs like Syngene. So I think CDMOs like Syngene, which have capabilities both on the chemical entities and the biological entities, might become even more relevant 10 20 years down the line. DVs or these other CDMOs might need to get into biological entities because that is where the puck is going in terms of medical R&D and the molecules that are coming up. So I think things can become more relevant, and you can also sort of think about things which will change less. But I think this real puck will be in the things that will become more relevant. That is where you can sort of identify the real trends happening.
Got you. Thank you. Um, M, do you want to go next? Market lover Mohit, is he next? Krishna?
Yeah, I think so. I think it's Market Lover Mohit and then Rahul and then Alpha 95.
Hello,
Yeah, please go
hello.
ahead.
Yeah, hi Ishmoit. Hello, am I audible?
Yeah, you're audible.
Yeah, first of all, I'm learning a lot of things from you, from your YouTube channel or from your tweets, and a biggest follower of you.
Thank you so much. But I think I
Oh no, he's hello.
You're
I think
audible,
he,
man.
I think he's gone.
Oh, okay.
Yeah, I was waiting for my turn, and now suddenly,
Don't worry, he'll come back. He's not going to leave you here.
yeah, yeah, that's the only hope.
Yeah.
Hello. Yeah, hi Ishmoit. Yeah. So my question was with regards to musical labels like Saregama. So now singers, artists, they are having their own channels. You may say on YouTube. In fact, they are on musical apps also like Spotify and Ghana.com. So it is not a thread or the one of the antithesis pointer for Saregama. If I search a singer, so I can directly land onto their page, onto their channel, and then music stream can go on. So is this not a threat to the musical labels?
See, this could be a threat in the very, very long run. But immediate, may just to give you an example, like Bacha has sort of launched some songs on his own channel. And
Right.
if you sort of read the description below, you'll see that the music label is owned by Universal Music Group. So, like I actually did this checks. So someone also asked in Saregama's last con call, एक singer बारे में किसने directly launch कर दिया. Even then they clarified that that song is also owned by a music label. The problem what ends up happening from the artist end is again just Indian context. I'm not talking about international context or a Beyonce or someone. Is that unless or until you have a like catalog of songs that you can keep launching every year, like for 4 or 5 songs, really your bargaining power isn't much. This is why you end up going to labels and stuff. So I think Indian context and international context where there is some difference. So latest con call of Saregama talks about that in depth in my view.
Okay, okay. And second, as per your bucket frame regarding to valuation, so Vikram Mehra, he told categorically that they are targeting 25-30% growth in next 3 to 4 years. They are targeting 25 to 30% growth in next 3 to 4 years. So if you see or if you compare valuation of Saregama with tips, तो आई थिंक सारेगामा अच्छे वैल्यूएशन पे ट्रेड कर रहा है 25-30% ग्रोथ तो अर्निंग्स इज विजिबल सो अगेन तो उसमें है क्या मतलब ऐसा वेर इन टिप्स में जैसे मैनेजमेंट इज नॉट दैट मच यू कैन से sophisticated or professional as compared to Saregama, but tips is trading at much higher valuation if you compare with Saregama.
I think see अगर 30% से ज्यादा ग्रोथ आ जाए तो आई टेक दैट एज सोने पे सुहागा बट आई वोंट सॉर्ट ऑफ राइट इन 30, 35, 40% growth sort of I'll just think about it roughly कि आगे तो it is very good. See, industry is poised to do well. Tips I've like lined out my reasons. I think कि it's not professionally run. This was my reason for not buying. If someone buys in allocations 3, 4, 5%, then perfectly makes sense. But since we had to take a higher allocation position, so for tips for me, at least in my portfolio construct, didn't make sense. If that makes sense.
Okay, okay, understood. And thanks again, thanks, and please continue this good work of teaching us.
Thank you, thank you. I think Sahil, let's take 1 or 2 more questions. My vocal cord has given away now.
Sure,
Yeah,
sure, sure.
sure.
Right.
Rahul, do you want to go next? Or
Thank you, man.
yeah.
My question is about Saregama again, our favorite. TV films, as how is it posed in the current OTT penetration, and what could be the growth triggers? My question is just a small one. So,
I think the immediate growth triggers will be through regional label acquisition. And already the industry pool itself is growing at 15-20% per annum types. तो मैं तो सोच रहा हूँ इतना आगे सोचो ही मत मतलब जो 8-9 ग्रोथ ट्रिगर्स हैं उनके बारे में सोचो ही मत ये 2-3 ग्रोथ ट्रिगर्स ही आगे तो मोर और लेस आवर जॉब इज डन एंड एक्चुअली सी जब आई एक्चुअली स्टॉप मतलब खुद भी लाइक आई एम नॉट थिंकिंग टू मच अबाउट इट आई डोंट वांट टू गेट टू बेसिकली इन्वॉल्व विद पर्टिकुलर स्टॉक राइट नाउ बिकॉज ब्रॉडली माय थीसिस इज सेट you can watch our video on YouTube as well. It explains the entire growth triggers and stuff in depth.
okay, thank you. Thanks.
So, Mohit, we've got two more speakers, Ditto Davis and Alpha. So,
Great.
Ditto Davis, go ahead, man.
Hi, Ishmael. Anyways, thank you for host for giving me opportunity. I just want to ask you about the call lending from RBI. How do you see this call lending? Is it? I know that you are more fascinated about debottlenecking type of capex in chemical companies, so on. So, how do you see this will play like a debottlenecking in this NBFCs?
Debottlenecking in NBFC. I couldn't get the question. Sorry.
I was asking about the co-lending.
As a co-lending model, I think if so, to be told, I don't have deep insights on that question as of now. So
Oh,
for me, like suppose one of the NBFC lenders like IFL Finance, which is also helping in sourcing of loans and stuff. Over there, I haven't considered that to be a part of the thesis yet because I think कि already अगर housing loan में 20% का ROE हो रहा है and you're getting the entire company at a 10-11 thousand crore market cap and housing finance book itself or company itself can trade.
Let's bring him back one last time. Welcome back for the last time.
आई थिंक कि अगर वहां पे ऑलरेडी एसओटीपी में इतना ज्यादा वैल्यू मिले तो आई एक्चुअली डिडंट थिंक अबाउट को लेंडिंग मॉडल एज ऑफ नाउ इतना डीप इनसाइट उसमें मैंने सोचा नहीं बट यस साकेत मेहरोत्रा डिड अ वेरी गुड वेबिनार ऑन फिनटेक स्पेस so basically if you can message us just after this I'll just send you the access you can watch the thing so he has explained almost every type of lending model every type of competitor in the space.
Cool. Let's take the last question from Alpha 95.
Yeah, hi, Shmit.
I hope you're doing well.
Yeah, so my question is regarding the clean fuels which we are moving towards. So basically taking an example of CNG as well as solar as well as electric vehicles. So where do you see the industry going? Because electric vehicles still like batteries are not yet capitalized to cover like 400-500 kilometers or long range we speak, and whereas CNG vehicles can cover that. So depending upon that and the charging capacity, what do you think where the industry would go in the future terms, or how does the industry can perform?
I think it's a catch-22 situation. That catch-22 situation is that you go for a job interview and your interview tells you that you need to have more experience. Then you again go for a job interview, then your interviewer tells you that you need more experience. So what should you do? Get more experience and then work. But to get more experience, you need to find work, right? So similar to this catch-22 situation where what ends up happening is that you need subsidies and you sort of need some private sector players or PSU to really take the initiatives of at least installing the infra. I think the way it might end up happening is that EVs might get adopted more in already the tier 1 cities, like 5-10 years down the line. Like Delhi mein adoption EV ka बढ़ रहा है. So I've been seeing Tata Nexons almost whenever I step out on the road. I'm seeing at least 2-3 Tata Nexons तो दिखने लग गए हैं. Like number plate भी उसमें नीचे green लगी होती है, pointing to electric vehicle. So so within the city travel के लिए EVs are good right now. But one of my relatives bought EV. He took it to Jaipur, and I think he traveled somewhere to Rajasthan. And on the way, he thought there are 2 electric vehicle charging stations, and both of them were shut. So he had to tow his car. So he had to call the crane and basically take his car till there. So unless or until we get the infra right, so it's still a little longer term in nature. In my view, CNG ka to it's already clear, absolutely clear कि there are going to be 11,000 CNG pumps. अब आप infra तब कब install करते हो? When you expect cars to basically refuel them or get gas in them. So it is very visible. Maruti ka 40-50% sales growth aa raha hai. So actually next Sunday we are releasing a 45-50 minute video on CNG, LPG, and what can potentially happen. And this could be this trend could last for at least 5-10 years, in my opinion. Right? Because government ka roadmap is very clear. And if you look at the market leader, that is Maruti. Even if you look at Tata, so Tata has also started launching CNG cars in the hatchback variants. So over there, at least next 5-6 years, I think CNG will grow. right?
So you mean to say that some of the big industry players like Confibet or EKC might grow at a good gradual rate, and then the EVs might tend to take up as the what do you call that, electric vehicles or the battery space tries to evolve itself and it becomes longer enough.
See, I'm not naming any particular stocks, but I think they like this could have like it could last for 10-15 years in my view. So just listen to Confidence Petroleum's. I think there's this investor meet on their own website. So just as a disclaimer, I don't own the stock. I'm just interested in it intellectually for intellectual purposes.
Yeah, sure. Thanks all of you for hosting the space. It was really nice.
Hi, thank you, Krishna. Thank you, Sahir. And thank you so much, Ish Mohit. I just wanted to say, I've been listening. I think I came on in the morning. You were doing something on Mastech, and then you went through the whole thing, and it there was a technical problem. You started again. Incredible. And you guys, your space had double the crowd that Subramaniam Swami is at. So you can imagine you've really pulled in people here. Okay, thanks a lot. Yeah, good night.
Thank you so much. Good night.
Yeah, with that, let me just thank Ish Mohit for what a fantastic. I mean, it's been 2.5 hours, and we don't even feel like it. I mean, I don't know. I don't know the last time we've done 2.5 hours, and there are more people still waiting to ask questions than the ones that actually asked questions. I don't think that's ever happened before. So I think that's a testament to the kind of value that you add, that people are just so enthusiastic and so excited to come listen to you. Despite, like, you did Mastech in the morning and then Sahil in the afternoon, and then you're here again for 2.5 hours. Hats off to you, man. I mean, seriously, some next level energy and next level dedication to help out the retail audience. And I thought I sort of want to end with a quote that a friend of mine told me. He was like, in for Indian retail investing, there was a pre SOIC era and a post SOIC era, and I think there's no sort of higher praise than that. With that, let me just, thank you, Ishmoit. Uh, massive gratitude for all the work that you do and all the learning that both Sire and me have personally had from associating with you. Sire, any closing words?
Yep. Ishmoy just messaged saying Twitter crashed.
Oh, shit.
Hang on. Wait,
Yeah.
just gonna try and put him on again. But yeah, thank you so much, Ishmohit. Great learning from you. Thank you for giving your deep insights again, and for a really intriguing presentation. Very novel. The idea of I guess connecting global situations to Indian situations. Really loved it, and thank you for answering all our questions in depth. And I'm sure the audience is also grateful for all the questions you answered and the presentation you gave. So, yeah, man, thank you so much. I don't know if you're here or listening, but super grateful, super honored. Thank you so much. Uh, l- and definitely enjoying the post SOIC era of retail investing. So much better than the pre SOIC era. Also, guys, just a quick disclaimer, nothing discussed here was investment advice. So please do your own research and consult your own financial advisor. Um, check out Ishmohit's YouTube channel if you haven't already. If you're living under a rock, like, you must check it out. It is brilliant. Um, check out his Twitter. Check out the SOIC Twitter. Um, check out Krishna's Twitter. He posts a lot of informative threads. And yeah, give us a follow. Yeah. And if you enjoyed the session, please spread the word. We try and do these pretty often. We're going to try and have more guests on. And yeah, Krishna, anything else?
Yeah, we have two really cool spaces planned for the upcoming week in the finance space.
Oh
So
shit!
yeah,
What about that? Damn, damn.
yeah. We won't announce the names right now. Just keep a lookout on Sire and my Twitter handle. We'll announce it within the next 30 minutes. So yeah, just keep a lookout. I don't know if Ishmoit is here, and I don't know if he's going to listen to his like the appreciation in the recording, but I really hope he does.
Yep.
Cool.
Uh,
I think we can just end the space now.
yep. Thank you guys. Thank you guys for being such a good audience. Another thank you to Ishmoit. If you hear this recording, thank you, buddy. Super honored, super grateful, and looking forward to hosting you again.
Yeah. Let's try and get him back again soon. Bye, guys. Have a great whatever's left of your Sunday night.